Welcome to this video. Today, we'll go over the updated withdrawal and payout policy of Apex Trader Funding. Whether you're an experienced trader or just starting with funded accounts, it's crucial to understand how to maximize your withdrawals and comply with the rules. The updates include new flexibility for payout requests, an improved profit-sharing structure, and refined compliance requirements. Let's get started. Hey, quick heads up! I've got exclusive discounts and coupon codes from 30% to 90% waiting for you in the description, thanks to our partnership with major prop firms in the market. And if you want detailed, honest reviews on funded trading programs and prop firms, just head over to tradingfunder.com. All right, let's continue with the presentation. Flexible withdrawal schedule. ATF has introduced a more flexible withdrawal schedule, allowing traders to request payouts anytime, provided they meet specific conditions. You need at least 8 trading days between requests, with 5 of those days generating profits of $50 or more. This flexibility is great for planning your payouts around your trading strategy and ensuring you're ready to withdraw when needed. Always track your trading activity to meet these requirements. Profit-sharing structure. ATF's profit-sharing structure is designed to reward traders for their success. You get to keep 100% of the first $25,000 in profits per account. After that, a 90-10 split applies, meaning you retain 90% of additional profits. This approach ensures that traders receive substantial rewards for their efforts while maintaining a sustainable partnership with ATF. Safety net rule. A new safety net rule has been added to protect traders and their accounts. For the first 3 approved payouts, you must maintain a balance equal to your drawdown threshold plus $100. For example, in a $25K account, the safety net balance is $25,100 plus $100 $25,200. This ensures your account remains stable and ready for continued trading. After the first 3 payouts, this rule no longer applies, giving you greater flexibility. Consistency rule. Consistency is key to successful trading, and ATF enforces a consistency rule to support disciplined traders. When requesting a payout, no single trading day should contribute more than 30% of the total profit since your last payout or the start of trading. This encourages traders to spread their profits over multiple days and reduces the risk of over-reliance on high-risk trades. Withdrawal methods. ATF continues to prioritize secure and reliable payment methods. US-based traders can use ACH transfers for payouts, while international traders can utilize Plain.com. If you're an international trader, you'll need to register with Plain.com for your first payout. Always double-check your payout details to avoid delays, especially since outdated or incorrect information can cause processing issues. Tax responsibilities. ATF treats traders as independent contractors, meaning you are responsible for reporting and paying taxes on your earnings. U.S. citizens receive a 1099 NISI form each January, detailing the previous year's payouts. Non-U.S. traders must manage their taxes independently, as ATF does not provide reports. It's always a good idea to consult a tax professional to understand your obligations and ensure compliance with local laws. Conclusion and tips for success. To wrap up, ATF's new policies provide traders with more flexibility and better profit-sharing opportunities. The key to successful withdrawals is meeting the requirements, planning your requests strategically, and maintaining compliance with rules like the safety net and consistency rule. For more expert advice, updates, and exclusive discounts on prop trading programs, visit tradingfunder.com. Thank you for watching, and as always, happy trading.